Hello, Namaskar. I'm going to start a series on teaching you various aspects of market, investing and trading using this facility. I hope you are going to like it and share with your friends and family. This is going to be an English series. Why? Because I want it to be covered for larger audience. And I'm going to go very slow so that all of you understand in best possible manner. Today, I want to talk about how to use simple moving average for the purpose of trading and investing. It's a brilliant concept, the moving average. To explain the moving average in a simple language, let me take some time out from StockEdge. Let me open this whiteboard and explain you the moving average concept. Now, let's take some data set, okay? So say we have 10 data set, okay? Let me just take a pencil. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 data set, okay? And there are some numbers to 10 data set. For example, the number of scores in last T20 of Indian team. So say for example, the number is 200, 190, 240, 160, 230, 190, 150, 190, and maybe 300. Okay, so these are last 10 scores of Indian cricket team in T20 match. When I'm calculating a moving average, there could be different kind of moving averages, but for our discussion's sake, we'll keep it simple. So there is simple moving average and there is exponential moving average. What is simple moving average? Summation of all these 10, okay, divided by 10. That's a simple moving average, right? What is exponential moving average? Exponential moving average is when you start giving high weightages to the latest events and low weightages to the far event. And weightages could be as simple as multiplying it by 10, 9, 8, 7. So it's basically a weighted moving average, which can be called an exponential moving average. So as a prudent person, you would definitely like to give high importance to the latest data, because if the team is in form, there is a possibility that the team will continue to score better. If the team is not in form, there is a possibility that the team will not score better in the next match. Okay, so do you understand the difference between simple moving average and exponential moving average? All right, now let's go back to StockEdge and let's try to see this from a market perspective and how it helps us to become a better trader or investor. Now, before we go into this, let us try to understand the different kind of trading or investing. So when you are a intraday trader, you trade only for the day. When you're a short-term swing trader, you trade for a couple of days. When you are a mid-term trader, you trade for a couple of more days. When you are a long-term trader, you actually hold the position for a long period of time. And when you are an investor, you hold a position for a very, very long period of time. Could be 2 years, 3 years. Based on that, moving average is a great indicator which can help you plan your position based on what kind of objective you have to trade. If you have a short-term trade, you will plan accordingly. If you have a medium-term trade, you will plan accordingly. So let's take an example. Let's today market is open, okay? And let's find out few trending stocks where a lot of activity is happening. Say for example, the stock like Tata Communication, okay? Now, looking at this chart, looking at Tata Communication, I may have a feeling that I want to trade this stock, okay? Now we have to understand whether I want to do a short-term trading, medium-term trading, or a long-term trading, okay? Now let's go to the chart here and let's add simple moving average. The moving average indicator will use the exponential moving average, not the simple moving average. So if you go down, we have 10-day exponential moving, 5-day exponential moving, 10 exponential moving, 20 exponential 50. It means last 5 days data is considered for the average calculation. This means last 10-day data is calculated for average. This means last 20-day data is taken, okay? If you are a short-term trader, you want to see shorter tenure moving average. If you are a longer position holder, you want to see the longer tenure moving average. Let's try to add 3 and see where do we go. So 5-day is 1 week, okay? Let's add 5-day, okay? Now let's go again. Let's add one more. 20-day is technically 1 month because there are 20 trading days, right? Let's add one other. Let's see which one should we add now. Let's say 50-day, which is basically 1 quarter, right? 3 months. And let's add another, which is 200-day, which is technically 1 full year, and save this. Now, here we have Tata Communication chart with all the moving averages together. Now today Tata Communication has gone up by almost 8.7%, right? Which is here. This is the level of 5-day moving average, which is 1377. What does this mean? This means that the stock on a shorter time frame has gone up and currently it is trading above its short-term moving average, which is the great news. Then the second moving average, which is a 20-day moving average, which is from short to a slightly higher duration. This is 1437 and the current price is 1492. That means the stock has started trading above its short to short medium moving average. And the medium moving average, which is the 50-day moving average, is 1554. Okay, what do we infer out of it? The inference is very simple, that if I have to trade this stock right now, it has to be only for a period of few days. It should not be for 2-3 months. Why? Because the stock is still trading below its medium term moving average, which is the 50 moving average. Okay. If I have to buy this stock as an investment for long term, I will not buy. Why? Because the 200-day moving average is 70-20 and typically a stock which trades below 200-day moving average should not be invested. That's the typical thought process. I'm not saying just blindly follow this. No, we will create a framework which is of our advantage. We will use moving average and probably will use 1 or 2 more techniques to finally create our framework which will add benefit to us. But right now, just to conclude, Tata Communication is definitely in a very shorter time frame, 5-day to 6-day, it's a strong. Already stock has gone up. In a medium time frame, it is powerful. But from a medium term, like for 2-3 month perspective, I am going to wait for this stock because the stock is still trading below medium term moving average. Let's see some other stock. Okay, let's go to some other stock. Say Paytm. Okay, a lot of us know Paytm and let us see what's happening with Paytm. So same moving average. Wow, brilliant. Look at this. Paytm has given a green candle here. I'm going to teach you candlestick also in a couple of days, but this is very powerful. So it has gone up by 7%, which is good. The 5-day moving average, so it is 690, the stock is trading at 711. If you look at the medium 20-day moving average, which is here, 720, 730, and if you look at this 200-day moving average, look at this 200-day moving average, can you see this? This one is 729. Now what is this saying? This is saying if the stock crosses this zone, okay, let's introduce a marker here so that we understand this properly. All right. Okay. So the point is, if the stock crosses this zone, okay, 730 plus, then I would not mind buying this stock for a medium to long horizon. Why? Because it is trading above 200-day moving average and probably the stock will go above 50-day moving average for a more convincing buy. By the way, one more value addition I want to do here is, if a shorter tenure moving average is trading above the longer tenure moving average, that means the stock has a positive trend, isn't it? So you see 50-day moving average is above 200-day moving average. That means in medium term, the stock is stronger vis-a-vis the longer tenure moving average. So that's also positive. Now, if I have to ask you, Tata Communication versus Paytm, where would you like to put your money? Definitely the answer is Paytm. So by doing this, you are constantly figuring out what are the stocks which are right stocks for your objective of market participation. Until unless we know our objective of market participation, we will not be able to do the right things in market. So let's see one more stock before we end this video. Let's go to 52-week high and let's see if there is any stock here. 52-week high, there is no stock. Okay, let's try to add NSE filter here and see the stocks which are NSE stocks. Okay, there are no major stocks, but NSE stocks we have. Wow, look at this. Taj GVK. Let's go inside the stock. It's a Taj GVK group. Wow, let's see what's happening here. This is 200-day moving average. Already stock is above 200-day. This is 50-day moving average. The stock is above that. This one is 20-day moving average, and this one is 5-day moving average. So will you be a buyer in this stock? Now, if I have to ask you vis-a-vis, first stock versus second stock versus third stock, which one you think has a higher chance of going up? Well, the answer is definitely this stock. Why? Because it is trading above all its major moving averages. So this is the basic understanding of moving average and how you can plan your trade depending upon your objective. Now, what we have done in StockEdge, as part of analytics, there are a lot of scans, and one of the scan which I want to talk about is the moving average scan, the exponential moving average scan. Now, there are stocks which are crossing the moving averages. There are stocks which are trading above the moving averages. All these filters are available here. For example, let's find out a stock which is where 50-day moving average is crossing 200-day moving average. This is also called the golden crossover. So let's go inside this and see, is there any stock? No. As on yesterday, there was no stock which was crossing this. Let me see if we have any NSE stock here or BSE stock, whatever. But let's see. Let's have only NSE stock for the time being. Okay, let's see. Do we have NSE stock here where moving average crossover? Yes. Ice Make Refrigerator is there. Mihi Chakra Chemical is there. These are the stocks where there is some kind of a crossover is happening where medium-term moving average is crossing the long-term moving average. By looking at these data points, one can also make good scans in identifying stocks, which I will teach you over a period of time. But I hope you understood the concept of moving average and how a simple moving average technique can help you know whether a stock is an uptrend or a downtrend. I follow a very, very simple rule that if a stock is below 200-day moving average, it has nothing to do with my business. I will be out of that stock. If a stock is above 200-day moving average, that is the stock which I should have in my portfolio. Otherwise, I will prefer to be in cash if most of the stocks are below 200-day moving average. I hope you liked this video. If you liked it, do share with your friend and family. And I'm sure this new format is giving you enough excitement to learn from me. Thank you. Bye. Jai Hind.